I think we all kind of understand there's a little bit of euphoria in the share price of Beyond Meat itself, but there is sort of a zeitgeist going on with this desire for some sort of alternative meat products, alternative dairy products out there, and Beyond Meat just seems to be riding that wave because it's, I guess, one of the only few sort of pure play publicly traded companies out there. Why don't you think Beyond Meat should be valued anywhere near the current share price where it's at right now?
Yeah, so, we think the downside comes from, again, we're believers in the market opportunity. We don't think this is a fad, better said. However, we think it's going to be a slower build, and especially to the extent that the market is using plant-based milk as sort of a proxy. Plant-based milk has about a 13% share of total milk. We think the market opportunity, the build is going to be a little bit slower in plant-based meat, and really that's driven by the need state, right? So we talk about the number of folks who may be desirous because of the environment, or people have talked about health, even though that's questionable. But the need state within plant-based milk, there's 2 times the number of folks who are lactose intolerant than there are sort of identified as non-meat eaters, talking about the U.S., which is their core market. And that's driving a disproportionate amount of frequency of purchase in plant-based milk. We think that's going to be more difficult to offset on plant-based meat. So we think it's a real market. We think it's going to grow. But again, within the context of valuation, trading somewhere closer to 30 times revenue, we just think it's pricing in a very significant opportunity that we think probably builds over a much slower period of time than what the market's anticipating right now.
So at the moment, we're trading at $141.53 on Beyond. You see a price target about $130, so about a 19% downside. How big could this market become from your perspective, and how out of whack have some of the overall more exuberant ideas of how big this market become?
Sure. So again, if we're using plant-based milk as a proxy, and I think most of the market generally is right now, it's got a 13% share of milk globally. That's happened over a period of about 2 decades. On meat, we think at best it could be 75% of that, so a 10% share of total meat. And that's really just driven by the consumption mix. Again, 25% of plant-based milk consumers drink or make up about 62% of the plant-based category. We think there's a smaller need state in plant-based meat. There's also, you also introduce, meat's a more fragmented market overall. Chicken is not the same as steak, is not the same as bacon, is not the same as sausage, and on and on. So that introduces other layers of complexity, more hurdle in each different category. I would argue Beyond Meat has done very well insofar as achieving taste parity in the products that they have in the market now. But so one, they've got to achieve that taste parity in each subsequent launch, and there's got to be a desirous market within those subcategories to switch into those different products.
All right, so I mean, we're looking at pictures now. It looks delicious based on what we're showing. Talk to me a little bit very quickly about the competition and the barriers to entry here, because when you go through the supermarket aisle, at least through the frozen food sections, there's a ton of options out there. I mean, Beyond Meat isn't the only game in town, despite how much coverage we give to it.
It's certainly not. However, I would say that they are placed in the refrigerated meat case next to their animal protein counterparts, which I think is an important distinction, and I think is the right move for the company. I think it's helped drive a lot of this initial trial because even the companies pointed out that 93% of the folks who at a Kroger bought Beyond Meat had bought animal-based products in the last 12 months. So there is that distinction. Having said that, if you look at the top 10 meat processors in the U.S., they are all they've all committed to either having plans in place or already introducing products to the market. So I don't think when I think about the competitive backdrop for Beyond Meat, I think about it within the context of valuation. If you're going to trade north of 20 times or kind of have that tech valuation, I think that demands some IP. I think it demands real high barriers to entry. The number of entrants, the number of really quality entrants into the market, credible competitors, Kellogg, Hormel, Kroger, just in the last week alone, I think that suggests that the barriers to entry aren't terribly high.